Well, hi everyone. I'm Maile Woodhall, your organic technical support specialist with the Hawaii Farmers Union. Thank you all for coming and hanging out with us tonight. So, we're part of a transitioning to organic partnership program, also referred to as TOPS, where we help farmers and producers with anything from certification to business development to grants, loans, you name it. We're here to support you with pathway programs and resources. In addition to our technical support, we also have our mentorship program where we pair you with an expert organic mentor and you can receive a $500 stipend. Really, the main requirement here is that you're looking to adopt organic practices or want to become certified organic. So if you're interested in any of these programs, feel free to reach out to me. I'll also be sure to drop my contact in the chat. So usually I open this up with a poll. And Ashley, did you want to do a quick poll for HFUU?
No, we're all good. Thank you.
Got it. Okay, so we are going to jump into a quick poll. If you guys can just go ahead and feel free to answer this to the best of your ability. This is true or false. And don't worry, you didn't accidentally step into like a quiz. Just kind of gauging your knowledge here. And we'll just take a moment as those trickle in. And the question is, organic records must be kept for 5 years. True or false? And really great. Looks like most of you are choosing true, and that is the answer. So it is required by the USDA National Organic Program for operations that are certified organic to maintain those records for 5 years. All right, next question. So organic certification requires 36 months or 3 years without the use of prohibited substances on the land before any crops are harvested. Is this true or false? We'll give it a couple moments. And I love it. Everyone is true, mostly choosing true, and that is correct. So in order to qualify and be eligible for organic certification, you must make sure that you haven't used any prohibited materials on your land for at least 36 months or 3 years. I know a lot of people think that, there's testing required in this to verify it, but for the most part, this is based on an honor system. So we would then fill out like a site history affidavit and it would be verified by the owner. So it is important that you have been maintaining that operation for at least 3 years. All right, next question. All right, so I kind of gave this one away, but you must have records to become certified organic. True or false? And again, those are trickling in, and I love it. 100% true. So it is required that you do maintain records for certification, but one of the misnomers is that you don't necessarily have to have all your records in place to become certified organic. So once you apply for certification, you would develop an organic system plan. Part of that would be, maintaining your records and having a system in place to do that. And I know we're going to take a deeper dive into records tonight because I know there's a lot of overlap with the Farm Service Agency and their requirements there. But yes, keeping records are very important for operations. All right, wonderful. So thanks for participating in that. We'll go ahead and close out the poll. So we're thrilled tonight to have joining us Darrin from the Farm Service Agency. He's been working with them for over a decade, working with farmers to help them to gain working access to capital and for long-term planning success. Darrin, thank you so much for being here, and the floor is yours.
Thank you so much, Miley, and thank you, Ashley, for facilitating. Thank you both for inviting me to speak. I'm excited that I have time to dive into a little bit more detail about what Farm Service Agency has to offer. It's a rare opportunity, and I feel privileged to be present and be able to provide this information to you. Um, so. Could I have a little bit of maybe some feedback from the participants? about what type of farming they do, what type of crops, some livestock, what their goals are. Just if you could, okay, coffee farming. Okay, so I have coffee farming. I can tailor some of my presentation to fit your needs or your interests. Anyone else besides coffee? Okay, fruit. Perfect. Here we go. Goats, flowers. Okay, perfect. Okay, I don't want to miss anyone. Anyone else have any corn? What kind of corn? Sweet corn. Okay, thank you. Cacao, ulu, fruit. Okay. All right, so that gives me a good idea of I'll give some tips, advice later on in the presentation. Um, all right, shall we start? So I'm going to give you an overview of the Farm Service Agency. You might not be familiar with all that Farm Service Agency has to offer, so let me just share my presentation. Okay. How does that look to everyone? Good.
Looks great.
So my name is Darrin, as Maile said. I am the farm loan manager for Maui County Farm Service Agency. We have an office on every island except Molokai and Lanai, and of course Niihau. So we we typically travel to other islands if there's no one available to meet with someone in person. But our goal is customer facing service, and I'll give you a little overview of what we do. We also have offices in American Samoa and Guam and all of the little islands in that area, the Northern Mariana Islands. In a service center for the USDA, there's typically the Natural Resources Conservation Service. Some of you may be aware of them already. The Natural Resources Conservation Service typically uses data from the Farm Service Agency to fulfill their program obligations. We also have the Farm Service Agency, of course, and then in some service centers, there's the Rural Development Office. Rural Development works typically with non-farm community housing or business lending projects, but they also do have a few farm-related programs like the value-added production grant that they provide. But across the country, USDA service centers, there's about 2,300 of these offices. So it's in general, it's pretty easy to access our office and our programs. That's about one service center to every 1 to 2 counties in the US. So again, the overview would be NRCS handles cost share programs and technical conservation assistance. Farm Service Agency handles farm record keeping, farm mapping, disaster assistance, safety net programs, and a variety of different loans that I'll discuss a little bit later. The Farm Service Agency has two main functions. One function is farm programs, which is led by a county executive director. The county executive director handles record keeping, farm mapping, disaster assistance, shipping cost reimbursements that you may have heard of, organic certification cost share programs, and safety net programs. The second function is farm loan programs. Farm loan programs is led by a farm loan manager like me and loan staff. Our mission is to make loans to family farm operations to begin, expand, or maintain their operations. The farm program side of the Farm Service Agency, it's financial assistance and risk management tools to help farmers and ranchers maintain operations through financial assistance, disaster recovery, and conservation support. The farm programs is funded separately than farm loan programs. The farm programs funding comes from the Commodity Credit Corporation. It's a government-owned and operated entity, and it borrows funds for various farm programs from the U.S. Treasury. So let's see here. There's a fun fact about the farm program side of FSA that maybe not many people know about, is that we are the only federal agency that has direct input from local farmers about how we administer our how we administer our programs. So this input is provided in the form of county office committee, and that committee is made up of a group of local elected farmers that meet in the county offices every month. And so if you inquire at a service center about the county office committee, there are election periods throughout the year for different districts or areas in the county that you're in. And so if you're interested, it's important for you to express your interest and maybe try to become an elected farmer on that committee. The more input we have about our programs, the better it is, especially to tailor them to the farmers who are actually producing the food and the fiber, the fuel, the things that we need to live. A little bit about farm programs signups and programs that are available right now, the signups that are available. So the first one would be the food safety certification for specialty crops. So this is I believe, a cost share reimbursement program. So the 31st is coming up soon to sign up for this one. So on-farm food safety program expenses relating to food safety certifications. Livestock forage, the deadline for that one is March 1st. And this is for last year's losses if you have pasture or rangeland. Emergency assistance for livestock, honeybees, and farm-raised fish. So I heard, or I saw, there was a honeybee producer possibly. So you may want to inquire about that program. Again, March 1st is the deadline. And there are links for these. So this presentation, I'm sure, will be provided, and then you can follow those links or contact your local office for information about how to sign up. So our farm loan program is the second aspect of the Farm Service Agency. Farm Service Agency is considered a separate pool of funds. We are funded through Congress each fiscal year. We are also considered a progression lender, which means that we are considered temporary financing until a borrower can successfully graduate to commercial credit. Progression lending includes operational reviews, farm visits. We request farm and personal tax records and farm production records. And we also have borrower financial training available. The training is through your choice of USDA approved vendors. One of those vendors, as an example, would be Go Farm Hawaii, is a training vendor for FSA. And those vendors or those trainers can be tailored for your personal needs for your farm operation. So it's a really good opportunity to go through FSA as a beginning farmer or someone who's transitioning their operation to a different type of crop or livestock, or even a type of production, such as transitioning to organic. We can provide the technical support through the service center, through NRCS, and then FSA has the loans and the farm program for disaster recovery as well. And so the vendors or the trainers that we have access to can be used as well to help you set up your farm record keeping system. So again, as was suggested earlier, farm record keeping is super important, and we will talk about that a little bit later as well for loans. So the interest rates for the farm loan program currently, as of this is February 2026, real estate is 5.75, operating 4.625, and joint financing is 3.75. We often get the question, how are FSA's interest rates determined? Since our interest rates are subsidized by the federal government, the rates are set based on the Federal Reserve, the US Treasury, and the current economic conditions, among other factors. So generally, they're based on market yields for outstanding US Treasury obligations. I would say that over my decade of working at the Farm Service Agency, I'm still not quite sure how the interest rates are decided. All I know is that we are provided with them every month. They change every month. We're typically around 2 points below market rates. And regardless, FSA uses the lowest interest rate at the time of approval or of closing a loan, and then it's fixed for the term of the loan. All right, so any questions before I move on?
I think we can keep rolling, and then at the end,
Perfect.
we'll do a Q&A session.
Okay. So farm loan types. This is an overview. We have direct loans, farm ownership loans, which I'm sure many of you have heard of, up to $600,000 is our maximum. Farm ownership microloans, which are used for similar purposes, up to $50,000. Operating loans up to $400,000 max. And those operating loans are split amongst the term and annual purposes, and microloans up to $50,000. And then youth loans, we have a youth loan program that is $10,000 or less. We also have guaranteed loans. Guaranteed loans include farm ownership up to 2.3 million, term operating up to 2.3 million, and lines of credit. So direct means you apply through the Farm Service Agency, through your local office in the county. Guaranteed means that you would apply through a commercial lender first, and then that lender would apply for a guarantee through FSA. So in this case, for guaranteed, the lender is our borrower. We often combine the two, direct and guaranteed, to do joint financing for real estate purchases, farmland purchases here. Direct farm ownership loans, they can be used to purchase land, construct buildings, conservation projects. Let me go back for a moment. So you can acquire or enlarge a farm or make a down payment on a farm, make capital improvements to a farm, construction, purchase or improvement of farm dwellings, service buildings, or other facilities. soil and water conservation projects, and that can be in combination with the Natural Resources Conservation Service. We can also so this includes, sorry, terracing. It could include making roadways, clearing for expanding your production areas, etc. Just to provide a little bit of eligibility overview. So for our farm ownership loans, it must be a family-owned and operated farm when the loan is closed. The borrower must be the owner and the operator and provide most of the day-to-day labor and management decisions. So we have some of these guidelines to make sure that the loans we're making are to family farm operations and not just a corporate farm. In the sense of management provided outside of ownership, we want the ownership to be and the management to be the same as the applicant. Farm loan types for direct operating loans, again, term and annual. The operating loans are up to 400,000, and they may not, the term of them is typically 7 years from the date of the note. And you can use these to purchase equipment, livestock. You can also use it for conservation costs, annual operating expenses, which would include utilities, farm supplies, compost, those types of things. And you can also use it for minor real estate repairs or improvements, assuming that it's a low enough amount that you can pay it back within 7 years. You can also use it for refinancing farm-related debts. Farm-related debts, as long as it increases the farm's profitability. Let's see here. Microloans, it's more of a streamlined application, and you can apply. We have microloans for farm ownership purposes, mainly to construct small buildings on a property that is currently owned by the applicant. The operating loans, term and annual, again, it's 50,000 or less, and you can use them for the same purposes. We typically make a lot of microloans related to NRCS equipped projects. So for high tunnels, for conservation contracts, and we work directly with NRCS to figure out the timing of our loan. Often it's a cost share program. The person would apply for the loan first. They would complete the requirements for the contract, and then we would try to time the closing of the loan and consider when they would get their contract and when they would finish completion of the high tunnel or their conservation plan. So the microloans are also used currently for grants through various organizations or state or local government grant programs for farming. And they're often used for things like a small tractor, walk behind tractors, seedlings. Maybe you're expanding your growing area for your current farm, or maybe you lease land and you need fencing. On Maui, of course, there's a lot of deer, so there's fencing needs that people use microloans for. The youth loan program is $10,000, and it is used for operating or term purposes. We make youth loans to individual young people to start and operate income producing projects of modest size, and they're usually in connection with 4-H clubs, FFA, Future Farmers of America, youth groups, or other similar organizations related to agriculture. You can use a youth loan for livestock, machinery, equipment, and operating expenses. Again, the maximum amount is $10,000. The term is 1 to 7 years, and you have to be between the ages of 10 and 20 years old. These, in Hawaii, Molokai has the most youth loans in the state, associated with their 4-H program. Typically, they're used for buying a steer or a hog and raising it to maturity and then selling it at a livestock market. They can also be used for, so you need a recommendation from a project advisor. And that's the key there, is that your parent needs to sign off on it, and you have to have an advisor that'll help the youth applicant throughout the whole project to fulfill the loan requirements. Here's some examples: raising steers and hogs, as I mentioned, raising layers for egg sales, Hawaiian Homestead Youth Council projects, so value-added equipment for processing homegrown fruits and vegetables, high school ag business projects, purchasing walk-behind tractors for a market garden, or building out a small farm stand. The youth loan interest rates are the same as our operating loan rates. So that would be right now 4.625 for January, or the February rates that I mentioned before. These are, I have to say, these are our favorite loans to make because you're working with future aspiring farmers. They're learning young how to start a business. And we all know that it's difficult to run a farm and to manage the marketing and the record keeping. And so having an advisor is a really great way for them to start that experience young. The other thing about these youth loan applications is that we can process them very quickly. In fact, we could probably process a youth loan application within an hour from a complete application. So they're a great way for someone to start young. Here's an overview of our direct application process. So this is where we're getting into the technical guidance, the timeframes for FSA farm loan programs. The most commonly used application form is the FSA 2001. And so if you are familiar with our program, you've seen this form before. Previously, it was kind of overwhelming. It's still, there's still a lot of paperwork, but it's streamlined and smart. It's been reduced by almost 13 pages from the previous version, and it's a smart form. It's more user-friendly. We also help people fill it out if you come into the office and meet with us, or virtually or over the phone if you have any questions. So once you submit your application, our goal is less than 45 days after we receive the complete application is to have a determination for the applicant. Within that time frame would be the environmental review, the eligibility, feasibility, collateral analysis, final loan determination, and then if it's a real estate loan, we would conduct an appraisal and then proceed to closing if the appraisal is considered appropriate. And so let's break this down a little bit more. So with our underwriting, we're gonna analyze it based on the comprehensive or holistic feasibility of the farm operation. So the first thing, the environmental review. We're going to ask or consider, does your project or operation impact wetlands or highly erodible soils? If there's construction included in the application, does the project involve soil disturbance below the previous plow line? In a lot of places, there have been cane fields or pineapple. And so if we can find evidence of that, then that sort of cuts through a lot of the environmental evaluation that we have to do, because we know that it's been disturbed at least 24 inches below the soil for those crops. The next aspect would be eligibility. So does the applicant fit our general eligibility for all loans? Is the applicant eligible for the specific loan they are applying for? For example, farm ownership loans have different eligibility for that type of loan than our operating loans do? And are the funds requested being used for an eligible purpose? Another example would be we wouldn't be able to refinance real estate debt. So what are they requesting the funds to be used for, and does it fit within our handbook guidelines? Feasibility is the next aspect of our underwriting. Do you have historical records to support your projection? Is your projection realistic based on the historical production and sales numbers that you provided? And does the land you propose to farm on support those numbers? Is it an appropriate microclimate for the crops you're growing? So for example, coffee, very specific microclimate that would be suitable for coffee. We would try to analyze where you're planning on growing that crop. Let's see, corn, same thing. What is the altitude for that crop? Is it too dry? Is it too wet? And we'll ask you all of these questions. We'll get into the nitty-gritty, the details about your production. Another example would be bees and honey. Perhaps maybe where you're planning to have your hives it's too wet. If there's constant rainfall, how are you going to prevent excess pests, or perhaps there's not enough fodder for your bees in the area within their flight range. So we're gonna consider all of those aspects. The location, is it appropriate for your farm? And perhaps we even look at the soil type. Maybe the crop you're growing requires a different type of soil amendment than you have planned. So again, the next step would be collateral. But let's go back a little bit. So to talk a little bit more of feasibility, holistic to us means, again, availability of the markets for your crops. So if you're going to be, for example, maybe your farm is located around Hilo, but your primary market is Kona. So we're gonna try to analyze, maybe your expenses need to be increased a little bit because you're driving so much to deliver your products. Or on Maui, if your farm is in Kaupo, Hana side, maybe you're going to have to drive quite far because your primary market is in Lahaina. So we're going to talk about that with you as you apply and as we look at your projection for the feasibility of your farm. So it's not only, theoretically, does your plan work based on your production and your yield, but is it going to be possible for you to fulfill this farm plan logistically in relation to your markets? So for production, we look at yield and price, and those should be supported with your historical records or other fact-based verifications. So county and state market prices and the yields work really well. Unique crops like ulu or taro, for example, kalo, do you have data from that similar microclimate or that similar area that will help you decide what your production will be or the yield will be on the crop for the property that you're planning on farming on? The last part we consider is collateral or security. Is the loan secure with the collateral that is being offered? So for real estate, it's pretty straightforward. We would take a mortgage on the property and that would serve as our collateral. And we need 100% of the loan amount typically for collateral, up to 125% depending on the type of loan that we're making. For minor repairs on land that you own, it could be the real estate itself, or possibly it could be a tractor that you have to serve as collateral. So the last part of the analysis would be, is there equity available to reduce the risk to the agency to make you a loan? The general eligibility, as I was alluding to, is different based on a lot of factors. It's based on the individual applicant, their experiences. It's also based on the type of loan you're applying for. So it's really handy to use this loan assistance tool it'll ask you a series of questions and then help you decide what type of loan would be appropriate for you. So this is sort of the foundation for our loan program, and it's considered based on each applicant. And so because it's so specialized and case by case, it's really good for you to set up an appointment with a loan staff near you and have a discussion about what type of loan would work best for you and your operation. This is a good reminder that we do not provide pre-approvals. We base our decision, as mentioned before, on your specific land that you're farming on. So for real estate purchases, we need to determine the location of where you're farming. So that means that when you complete an application for a farmland purchase with us, you will need a signed purchase contract, an executed purchase contract, so that we know where the farm is located, how much acreage you have available to you, and what type of development and infrastructure you need on that specific land. This is tricky to navigate at times, as you can imagine, because sellers or real estate agents, they want to see a pre-approval. And so we often are able to meet with the applicant and their real estate agent to go through the purchase contract. We suggest a time frame of 90 days to close with an option to extend by 30 days. That gives us enough time to go through all of those previous steps I mentioned. Here's some hints. Review an application package and then schedule a meeting with one of us. So schedule a meeting with a loan officer to review your goals and strategize your loan application timeframes. Document the details of your operation or your experiences prior to applying. So where are you planning on farming? What type of crops or livestock do you have in mind? How are you going to market these things? Maybe you're doing value added. Maybe with your honey production, you're going to create some products, soap, body butters with the wax. Maybe you're doing value-added processing of the sweet corn. Perhaps you're harvesting the sweet corn and you're processing it and freezing it so you can sell it as a frozen value-added product. For agroforestry, perhaps you're harvesting some of the timber and maybe you have some native crops that you plan on selling the seedlings. Where are you going to sell those seedlings and how much are you selling them for? In the case of fruit production, coffee production, maybe you need irrigation. So what kind of infrastructure might you need? So I would recommend to make a list of essentially all of the things that you need to be successful in a typical year when you submit your application. Think about the land of area that you need to produce on to get the yield that you're planning on and able to sell and pay the loan back. It's helpful. I've worked through it with people to map out the farm. And this doesn't have to be maybe you haven't found the land you want to purchase yet, but you would create a farm map and you would sort of draw out where these crops will go, what infrastructure you need. Maybe you need fencing and a road, and you would map it out so you can see it, and then you can create a plan from there. So this is the key here. Again, record keeping comes up. Your production and financial records available, and a realistic projection that focuses on the whole farm sustainability. So again, production, yield, and price, but the key is that the farm is sustaining itself. The farm itself is viable. So I did a small survey of experienced farmers, and the common advice was that the key to sustainability of a farm is that it's economically viable so that it can pay for the environmental quality, it can afford to do conservation projects, and you can also afford to pay your labor and be socially responsible so that they're treated fairly. So it sort of falls into place when a farm is able to market their products and sell successfully. Those other things create the three legs of sustainability for a farm. We are committed at FSA to provide an application to anyone. We will provide it to you with technical guidance of how to complete it, what information you need. And again, it's important to meet with us before you submit an application just to save yourself time. And we don't want you to be submitting documents back and forth. So meet with us. We enjoy working with customers to find a solution and strategy that meets their needs. And this includes working with other lenders. We work with grant providers through the state and local agencies or governments. And we try to create a package that will benefit the producer so that their farm can succeed. You can obtain an application anywhere on this slide or in person at an office. Your farm loan staff in Hawaii are these 3 people managing Hawaii County, Honolulu, and Kauai County, and then Maui. For farm programs, these will be your contacts at the moment. So Keaton Fuji, Hawaii County, Maui County, James Brown, Kauai County, Calvin Threat, and Honolulu County, Josie. Thank you.
Wonderful. Thank you so much, Darrin. So for our participants, if you guys have any questions, please feel free to drop them in the chat, and then we can kind of go through those. And a few of those did come in initially. And Ashley, I was going to go ahead and read those unless you wanted to go through those.
Nope, go ahead.
Great. The first one just had to do with how much does the food safety cost share cover? And now, is that similar to the organic cost share program?
That's a question that I will get back to you on. I'm not sure.
Okay.
Yeah.
Next one had to do with, I think, the real estate loans, and these ones actually came in advance. They were asking about, does this apply to properties located in Lava Zone 2 for Hawaii Island? It's because
Right.
it's only.
That's another question I will have to get back about. Yeah,
All
I'm
right,
not sure.
sure. And then the next one is just, are agricultural leases eligible, or does it have to be fee simple ownership?
We can technically make loans for agricultural leases as long as there's a lease value that's appraisable. If there's an appraised value of that lease, then yes. Do you know specifically if this means Hawaiian homesteads or?
They did not specify, but I know, as we know, many of our leases around here are with Kamehameha Schools or KS. So they're
Okay.
wondering if you also work with any private entities like that.
I would say you might as well inquire with FSA and discuss it in person and figure out if your specific situation will work.
Okay.
But I personally have done I've made loans on leased property, yeah, for improvements.
And then Ryan did ask if we could share the links from the earlier slides in the chats. Not sure in particular what those were, but we can also be sure to share the PowerPoint. And it looks like Darren's going to pull those up now.
Yep.
So we'll get those to you, Ryan. Next one was from Alexandra. She was said, tell me more about funding towards the conservation plan.
Funding for the conservation plan for our loan program. We have a list of eligible types of conservation. I mentioned briefly terracing could be one of them. It would be typically projects associated with the Natural Resources Conservation Service. So if you have a conservation plan or a contract that you're trying to complete, then most likely we'd be able to make a loan associated with that.
Great. Next question was for real estate purchases. How much are applicants typically eligible for?
Uh, we so our decision is based on a future farm plan. And so it's not necessarily how much is a person eligible eligible for, but it's how much the farm can afford to pay. So, for example, our maximum amount is $600,000, but we often do joint financing with another lender. So if the property is 1.2 million, we would do 600,000 direct through our office, and they would do 600,000 through another lender. The total 1.2 million would have to be paid back by the farm itself. And so when we look at the whole farm plan in a typical year in the future, we consider the cash flow of the farm itself to see if it can pay the expenses related to the farm and also pay back the mortgages for both loans.
Right, great. And I wanted to just piggyback off that question. I was just curious about eligibility. Did you have to be a producer? Is it that you look at tax records, or can you share a little more insight about eligibility to apply for the real estate purchase loans?
Sure. Uh, for real estate purchase loans, part of the complete application is 3 years of historical production records and 3 years of historical financial records from a farm that someone operates, or perhaps they managed another person's farm and they were able to use those records. So, for example, if I worked on an organic vegetable and fruit farm for 1 year, maybe the owner of that farm would let me use the production records and financials to show that I managed a certain aspect of the crop production and marketing for that operation. And I could use that and provide that to FSA as part of my experience requirements. The 3 years can also be substituted. 2 of those years can be substituted with other experiences. So education could be substituted if you have a 4-year degree in agriculture. Mentorships, trainings that you've been through. So Go Farm programs, for example, or perhaps you did a mentorship through HFUU. All of those things are considered when someone applies to substitute those 3 years.
Great, thanks for that insight. Now, Kat was asking which loan is best to add a commercial kitchen to produce value-added products on the farm,
That would be our farm ownership loan, which can be used for construction.
right? And Malia is asking, do you have to show that you are able to make the whole amount of the loan payment from the farm income, or can some of the monthly payments be from another? Sorry, we just had someone walk
That's
in
all right.
here.
So we get this question often. The goal for our program is to make loans to farm business operations. So the primary source of income would be for production agriculture, whether it's value-added production, crops, livestock. But perhaps you also have a lot of farmers have contract income or other farm income. If they do agritourism, maybe they have workshops on their farm. Maybe they do, maybe they plant out or grow seedlings for another farm operation. We can use that farm income as well when we consider the cash flow. The goal again is that the majority of the income is coming from the farm to pay back the loan.
Great. And would a farm loan be available to a group of individuals that has a seller finance purchase contract with a 5-year interest only initial seller loan with a balloon payment after 5-year loan?
Yes, the details and strategy about that situation would definitely be worth talking to a loan officer because we have done that before.
Okay.
Yes.
And are there loans available for soil toxins, such as arsenic remedies?
I would say yes. Yep. If you're amending the soil, yes.
Great. And that looks like that's all of our questions. If you guys have anything else you'd like to add, this is your time to jump in. Let's give that a moment. And it looks like that answered everything. So, Darrin, we just want to thank you so much for being here tonight and sharing this wonderful insight, and for all of you participants for showing up. I just want to remind everybody that through the TOPP program, we do have these ongoing webinars. Everything is recorded and available through our YouTube channel, so feel free to check that out. And I'll go ahead and just drop that info right here about our TOPP program. And if you have additional questions, always feel free to reach out, and we're here to support you. So thank you, everybody. Have a wonderful evening.
Thank you, everyone.